It's not that silver has underperformed or is counterintuitive in its nature. It's why are 8 banks holding it down the way that they are? People would say, well, can that go on forever? No, it can't, because for the first time over the last 2 years, countries that are now coordinated, motivated, sophisticated, and wealthy, mostly the BRICS nations, are saying, okay, well, we'll stand for delivery. And the LBMA, zoom, their inventory is dropping. Now we're T plus 8 weeks. Sorry, we're not the T plus 1 day that we told you we are. And now you're seeing record imports into the United States. Record, month over month over month. Huge amounts. So the question is silver traded freely? No. Will it? Yes, I believe it is, because what is happening for the first time ever is that these banks in the West, who are as stupid as a mud wall by doing this, are now being challenged by the rest of the world for delivery.
AndySchectman, president of Miles Franklin, has been closely monitoring what he calls a critical shift unfolding in the global silver market. According to Schectman, the United States is witnessing record silver imports month after month, signaling a dramatic uptick in physical demand that could fundamentally reshape the landscape for precious metals. The data supports his observations. U.S. silver imports for consumption reached approximately 4,200 metric tons in 2024, remaining below the 2020 peak of 6,730 metric tons but surpassing previous years. More recently, figures from May 2025 reveal a year-over-year increase in silver imports of 0.063%, with sharp rises from key trading partners. Mexico led with a 30.6% increase worth $70.7 million. Argentina also showed notable growth with a 100% increase, totaling $3.48 million in silver imports. Schectman argues that silver has not underperformed due to natural market forces, but rather because of deliberate manipulation by powerful financial entities. However, he believes this manipulation is becoming increasingly unsustainable. A growing shift toward physical delivery, especially from BRICS nations, is challenging the dominance of paper-based silver markets. Russia appears to be leading this trend, with a coordinated accumulation strategy underway. Central banks in Russia, India, and China are reportedly continuing to stockpile precious metals, maintaining a strong bid under prices and applying steady pressure to the market structure. India, long known for its cultural affinity toward gold, is now experiencing what Schectman describes as a silver rush. Retail demand for silver in the country rose 7% during the first half of 2025, according to the Silver Institute. Even more striking, silver imports in India surged by 431% year-over-year through the first 5 months of the year, totaling 544.1 tons. Despite the impressive rally in silver prices, recently hitting 14-year highs, the metal remains historically undervalued when measured against both technical indicators and supply-demand fundamentals. Make sure to tune in for our expert analysis. Don't miss out on future content. Hit the subscribe button and turn on notifications to stay in the loop.
Ultimately higher than anyone thinks possible. I think it's the most undervalued asset on the planet. The word that I think of is asymmetrical, low downside, high upside. I have been one of the few people who have either been too stupid or had the guts to say that I believe it's the military-industrial complex that has been suppressing the price of silver for a very long time. And I think they've gotten caught. Let me explain. Most of my career, no one ever stood for delivery. Never stood for delivery. Right now, we see the LBMA, the London Metals Exchange, which has watched its inventory. If anyone out there Googles silver stockpiles LBMA, you'll get a graph. And it's like a ski hill. It's straight down to the lowest level of silver since they started keeping records in the 140-year exchange. It's being drained. Now, the LBMA is a T+1 settlement, meaning T for trade plus 1 settle. Third day your metal is moving. Well, they're telling us that it's T plus 8 weeks because they don't have enough in the way of trucks or manpower to move it. David Jensen, who does an amazing job on Substack, will tell you that they have a 190 million ounce float, 800 million ounces of silver there, of which 190 million are available to be delivered against the contracts. The other 500 plus million belong to the ETFs large. But they trade 1.9 billion 1.9 billion ounces per day is what they are in essence doing. The number that they really do is roughly 200 million ounces per day. That's what they post. He goes on and shows proof, and it's been verified that they only post the final settlement numbers, that they're trading 10 times that amount. to 1.92 billion ounces per day, 3.5 times the annual global mine supply, 10 times the float. So if everyone stands for delivery and you only have 1/10 the silver there, do you see a problem? Well, yeah, we're T plus 8 weeks now. Sorry, not the T plus 1 that we told you because we don't have enough in the way of trucks. So let me back that up. How does it all happen? 3 years ago, when I gave a speech at VRIC, where I always see you, Jay Martin's conference, and Jay is here, and it's the only other conference I always go to. Check it out. It's a good one in Charlotte's backyard in January in Vancouver. I said there's 500 ounces in the tip of a Tomahawk cruise missile. That's the research I came up with. And I don't know anyone saying that before that. A guy comes up to me in the audience and he says, I work for the Department of Defense. I almost fall over. He says, I have designed and helped develop cruise missiles, and I think there's some silver in it, but I think you're wrong on the number. Okay, sorry. He says, I'll get back to you. I don't hear from him. Between 13 and 14 kilograms of silver in the cone of almost every cruise missile you can think of, Hellfire, Tomahawk, Patriot, you name it. And all sorts of high-tech weaponry and aerospace and submarines, they all have silver in it. And now so the military needs all this silver for high-tech weaponry. It used to be calculated in the supply-demand numbers out of the Silver Institute. Not anymore. It vanished. We have a 250 or 60 million shortfall every year and no military applications in the supply-demand numbers. Okay, so even more interesting. And then you get to the point where you take a look at COMEX. There are 8 banks, 8 Western commercial banks, 8, that hold the largest concentrated short position of any commodity ever traded in the history of the COMEX market in silver. This tiny little market, you have 8 banks that are massively short. And the LBMA, they're trading 3.5 times the annual global mine supply every single day, 10 times the availability of the silver that they have backing those contracts. All of this stuff. Now ask yourself, why? Why would 10 Western banks, 8 Western banks, hold a short position as extremely large as it is and almost all of it naked, meaning it's not backed by anything? And the question is, in my mind, answered by the reality of the military-industrial complex. Think BlackRock. BlackRock is the custodian, along with J.P. Morgan, of the world's largest silver trust, SLV. You can naked short the hell out of SLV if you want. So let's just pretend I'm right for a moment. A company like BlackRock, who owns all of the military manufacturers, like Raytheon and all of the companies that make the weapons, well, they also are very deep into silver, whether it be PSLV or being a custodian of SLV and GLD. So they suppress the price of silver to make the high-tech weapons to create and sell all around the world to wage war. And then you see countries like the Ukraine get blown up with those weapons. Who then gets the reconstruction contract? Oh yeah, it's BlackRock. My point to you is this. It's not that silver has underperformed or is counterintuitive in its nature. It's why are 8 banks holding it down the way that they are. The first time over the last 2 years, countries that are now coordinated, motivated, sophisticated, and wealthy, mostly the BRICS nations, are saying, okay, well, we'll stand for delivery. And the LBMA, zoom, their inventory is dropping. Now we're T plus 8 weeks. Sorry, we're not the T plus 1 day that we told you we are. And now you're seeing record imports into the United States. Record, month over month over month. Huge amounts. So the question is silver traded freely? No. Will it? Yes, I believe it is, because what is happening for the first time ever is that these banks in the West, who are stupid as a mud wall by doing this, are now being challenged by the rest of the world for delivery. So I would say silver offers potential that I've never seen in any asset I've ever owned or would ever think of buying with such low downside. And, I would say to those people, have strong fingertips, trust your gut. There isn't an asset with a better setup on the planet, not just for the fact that it's undervalued or it's being shorted, but the plurality in uses, monetary uses, digital uses, solar panel use, military use. All of these uses for silver in different areas makes it an asset that, and your folks in Canada are lobbying to move it from a industrial to a strategic metal. It is a strategic metal. And my favorite guy on Twitter, Eric Young, King Kong on Twitter, YEUNG, I think it is, he says the Chinese are doing the same thing. They're shorting the price in the West to join them if you can't beat them, and buying it all around the world. China is the second largest producer in the world of silver, and they're flying all around Latin America. Go ask Sean Kunkun from Dolly Varden. He'll tell you they're flying all around Latin America, going right to the miners like Dolly Varden and saying, we will buy your doré and your concentrate and pay double what the West will. Doré being crudely refined bars and concentrate like a sludge, and they ship it back to China to refine it. Now, why would the second largest producer in the world of silver need to do that?
AndySchectman observes that global accumulation of gold and silver is accelerating dramatically, even as prices remain artificially suppressed on the COMEX and LBMA. This growing divergence, he warns, could present a critical strategic disadvantage for the United States if left unaddressed. May saw the largest gold and silver deliveries in COMEX history, signaling record monthly inflows and raising questions about the identity of the buyers behind these unprecedented movements. Schectman points to the rapid outflow of metal from COMEX vaults, suggesting that much of the metal is being acquired by aggressive central bank buyers. Schectman believes this global reallocation is ushering in a profound transformation of the gold market, one that could lead to a significant repricing of the metal. Several converging forces, including persistent supply constraints, unrelenting central bank demand, and dwindling trust in dollar-based systems, are laying the groundwork for what may become one of the most powerful bull markets in the history of precious metals. In this environment, a gold price of $8,000 per ounce is no longer an outlandish projection but a realistic reflection of deepening supply-demand imbalances. Let's get back to the interview.
After 4 years of administration being too stupid to be stupid, this just puts stupid exclamation point. You should be extending the olive branch and finding ways to work cooperatively. Those are not tariffs. Those are sanctions. A tariff is something you put in place to protect your manufacturing. If I don't like what you're doing, Charlotte, and I say, you know what, if you keep doing it, I'm putting 110% tariff on anything you do. That's not a tariff. That is a sanction. I'm threatening you. I'm not putting a tariff on to equal or level the playing field. What he is doing is accelerating and reinforcing the mentality that these countries have to begin with to get together. That is of a country that not only is being right? And Doge says we can get up to $2 trillion in savings, and they show Congress. Congress can't vote on it. They can't ratify anything. So they come to $80 billion in savings, right? That's a lot of money for you and me. That's 38 hours worth of spending in the U.S. government. So we're a government, they want to raise the debt ceiling to $5 trillion. There's going to be a $2.5 trillion deficit. There's tremendous infighting still between red and blue, and this coercion and our irresponsible spending, and on and on and on. We haven't learned. And so we've pissed off the world. And so in my opinion, it's the wrong thing to do. Now, let me say this. I'd vote for Trump again. I voted for him. I'm glad he's here. I think we'd be in a world of hurt if it were the other way around. However, his actions, the previous administration's actions were too dumb to be dumb. This is almost like he's trying to foster in a reset the way the previous administration did. Piss everyone off enough so that they dump treasuries. Now, they're already doing it. They're already shedding treasuries. The Fed had to come in 2-3 weeks ago and buy $48 billion worth of treasuries, 3, 10, and 30 year. The Treasury had to come in 2 weeks in a row and buy $10 billion worth of longer maturity, 10, 20, 30-year treasuries because the demand is waning. So these countries are shedding treasuries and buying gold. But if that's ultimately, if you realize we're too far down the rabbit hole, that we've created such a mess with our indebtedness, with interest rates that we suppressed forever, that we can't fix the problem. If we try to tackle inflation with higher interest rates, we blow up the system. If we lower interest rates and inflation gets too high, we ultimately lead to a place where rates go higher again through inflation. And we're at that point where we're damned if we do and we're damned if we don't. And I will say the one difference between this administration and the previous is that this administration knows it, because we've become a net importer of gold since November. We've imported pretty damn well near $100 billion worth of gold since November that we know of. Somewhere in the neighborhood of $15 billion worth of silver that we know of. We have become net importers. And then you get Trump on Easter Sunday saying, well, he who has the gold makes the rules, the golden art of negotiating. You have Bessent, the Treasury Secretary, who says, I want to preside over another Bretton Woods, a new monetary system. He's a self-proclaimed gold bug. And then you have Judy Shelton, who in my presentation I play a 1-minute snippet, and she, in no uncertain terms, and she just said it again yesterday on Twitter, in no uncertain terms, she said to me, Andy, Trump told me when I was on his transition team, and for those who don't know Judy, she was his Federal Reserve nominee in 16 or 17, wasn't confirmed, but will probably be in that list of members who would take that position after Powell resigns or his tenure comes up to run the Fed. She said, Andy, on July 4th, 2026, Trump is going to make a huge deal of it because this is the 250th anniversary of the country. And he told me this is a big deal for him. And he's going to issue gold-backed treasuries, 50-year in duration. And I believe he will issue 50-year treasuries pegged by gold. Now, step back for a moment. I think someone said to him, if we don't do this, we're in big trouble. The rest of the world is accumulating gold and silver because the prices have been suppressed on COMEX and the LBMA for so long. They're gobbling it up. And if we don't do it, we're screwed. The amount of gold and silver coming into COMEX month over month over month over month, every single month seems to be record. The May contract just a month and a half ago was the largest delivery of both gold and silver in the history of the COMEX market. Who is buying all of this gold and silver? And most of it's leaving the COMEX. Where's it going? Who's taking it? And these are really big deals. So if you realize that that goes hand in hand with the central bank buying, I think someone got Trump's ear and said, not only do we need the gold and silver, but mathematically we're in trouble. And we do need a reset. And I would argue we're in the midst of that reset right now. But how do you reset the system without falling on the sword? Well, you find a villain. And how do you find the villain? Well, you incentivize everyone, all those mean countries who are being so unfair with us. As if you are the world reserve currency, you will always have a trade imbalance, period. You cannot provide the world enough dollars just through trade that they all need. So you have to export dollars, which means the dollar is strong, which means other currencies are weak, which means your manufacturing is non-competitive. So you send your manufacturing over to China and to Vietnam and to other countries who make things for you at half the price. And it's those countries who have used our dollars and bought our treasuries that have kept goods cheap, interest rates low, and asset prices high. That's the benefit we get for being the world reserve currency, amongst others. And if we think that we can then put tariffs on everyone else because it's not fair, think about it. Is it fair? We expect them all to use our dollar and to buy our treasuries. So what I'm getting at is they understand we're too far down the road. We can't raise rates or we blow up the system. We can't lower rates and inflate or we blow up the system. How do we get out of this indebtedness? How do we handle all of this massive debt load? Another $2.5 trillion added on to it now. Yeah, there's $37 trillion. But what about the $175 trillion that isn't on the balance sheet? Medicare, Medicaid, Social Security, government, military pensions, all of that stuff. How does that get paid for? So is he trying to get to a point where everyone says, screw it, dumps dollars, dumps treasuries, rates spike, stocks, bonds, real estate, the banks, the insurance companies are all inversely correlated to that? That's when you reset the system. You've brought back all of the gold. You peg a new system to gold, and you become more nationalistic rather than globalized. Now, I don't say that very often, but in my soul, I feel that is almost what he's trying to do. If not, his actions are too stupid to be stupid, because Vice President Vance talks about Triffin's dilemma. It's been written about on White House stationery, and he says maybe being the world reserve currency isn't all it's cut out to be. And the Treasury Secretary says, I want to preside over a new Bretton Woods.
Ignore the surface-level calm. Beneath the veneer of market stability, a powerful undercurrent is shifting the foundation of the global monetary system. From historic spikes in silver imports to unprecedented physical deliveries on Western exchanges, it's becoming clear that a structural realignment is underway. Emerging economies aren't just diversifying, they're positioning themselves for a post-dollar era. What was once seen as speculative fringe behavior is fast becoming the playbook for monetary resilience. If this trend continues to accelerate, the West may soon find itself outflanked in the realm of hard assets. As the tide turns toward physical metal, how long can paper-based price mechanisms remain the dominant force, and who truly benefits from keeping gold and silver undervalued? Share your perspective in the comments section. If the video resonates with you, join our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.